Good morning, my dear students. Today we would like to discuss something related to transfers. We are in our previous classes. We have discussed some transactions which are considered as a transfer. Today, under section 47, we would like to discuss some transactions which are not considered as a transfer. Any gain which is as a result of transfer of capital asset, that is called capital gain. Any income which is generated as a result of short-term capital asset, which is called short-term capital gain. Today we would like to discuss some transactions which are not considered as transfer. The only condition is to levy the tax on capital gain is to transaction should be transfers. Under section 47, some transactions which are not considered as a transfer. First one, that is distribution of assets in kind by a company to its shareholders on liquidation. Is a situation. In a liquidation stage, company may distribute its shares in kind, assets in kind, furniture, table, chair, etc., to its shareholders. It's not considered as it's a transaction. It's a transaction, but it is not considered as a transfer. Any income which is generated as a result as this transaction is not considered as, it is not levied on tax on it. Okay. The next one, distribution of capital asset in kind by HUF. HUF, we know, Hindu undivided family, to its members at the time of total or partial partition. Okay, we know partition. So at that time, any asset which is distributed to its members, it's not considered as a transfer. It's maybe a transaction, but it's not considered as a transaction. The next one, transfer of capital asset under a gift or a will or irrevocable trust. Situations may arise. So these are all the situations. Any number of situations we have. I here request you to prepare a note on transactions which are not considered as a transfer, and such transfers do not invite any taxable capital gain. All of you please prepare different types of transactions which are not considered as a transfer. I here discuss three of them. A list of transactions are shown in your textbook. All of you please write down in your note or somewhere else, and all of you please go through these transactions and submit it through Google Classroom. Okay. The next one, exemption as per section 10. It's very important concept. Exemption means some of the capital gains are not taxable as per section 10. What are the items which are not taxable as per this section? First one, that is capital gain on transfer of under section 64. Let us discuss in detail. Any income arising out of transfer of capital assets being a unit of under section 64 is not chargeable to tax if transfer is done on or after 1st April 2002. It is applicable whether it is a short-term capital asset or a long-term capital asset. I will repeat the same once again. Any income arising out of transfer of capital asset being a asset under this section is not chargeable if the transfer is done on or before 1st April 2002. And the second one, that is long-term capital gain on transfer BSE 500 equity shares, is a category of shares. Long-term capital gain arising out of the transfer of eligible equity shares acquired during 1st March 2003 and February 29, 2004 after 12 months through a recognized stock exchange is not taxable under this act or under this section, that is 10. Once again, long-term capital gain which is result as transfer of eligible equity shares acquired during 1st March 2003 and February 29, 2004. This is a period. After 12 months through a recognized stock exchange. Okay. Then the third one, capital gain on compulsory acquisition of urban agricultural land. This exemption is applicable only the assessee is an individual or an achiever. He owns an agricultural land situated in urban area. The transfer is done by way of compulsory acquisition. Agricultural land was used by an assessee or his parents for agricultural purposes. The assessment may be a long-term or short-term capital asset. These are the conditions. When these conditions are satisfied, any income generated or arises as a result of compulsory acquisition of urban agricultural land is exempted from capital gain. Okay. The next one, long-term capital gain on transfer of securities not chargeable to tax in cases covered by transaction tax. It's very simple. This exemption, to get this exemption to all conditions, first one, the asset transferred is a long-term capital asset. First condition. Then second condition, shares or securities or equity shares of a company or a unit of equity-oriented fund and transaction taken places on or after 1st October 2004. The transaction is chargeable to security transaction tax. So these are the conditions. When these conditions are satisfied, these exemptions can be availed. So these are all the 4 important transactions which are exempted as per section 10. Okay. The next important thing, next important concept, that is full value of consideration. What is mean by full value of consideration? Full value of consideration is the price for which a capital asset is transferred. The amount left after deducting the selling expense is net consideration. Simply we can say that it's a selling price. But difference is that full value of consideration is the price for which the capital asset is transferred. Simply, colloquially we can say that is a selling price. The amount left after deducting the selling expense, which is incurred for selling the asset, is called net consideration. Okay, that's all about today's discussion. By these words, let us conclude today's class. Thank you to all.